And welcome everyone to Biz Talk. I'm Michael Wang here in Beijing. Our topic today, financial cooperation in the Belt and Road Initiative. Now, financial connectivity is one of the BRI's 5 major priorities. So for more on this, I want to bring in Dr. Zhao Yang, who is Managing Director at China International Capital Corporation's Global Institute, as well as Professor Gu Qingyang from the Lee Kuan Yew School of Public Policy at the National University of Singapore. So Dr. Zhao, Professor Gu, thank you so much for joining us on the program. Dr. Zhao, I want to start with you. This year, of course, marks the 10th anniversary of the Belt and Road Initiative. Financial connectivity, such an important component of the BRI. Walk us through, take stock for us, what have been the major achievements of financial integration and financial connectivity in the past 10 years, Dr. Zhao?
Well, thank you, Michael. Thank you for having me here. Talking about the Belt and Road Initiative financial cooperation achievements, it has done a lot actually over the past decade, primarily driven by policy financial institutions and state-owned banks. Belt and Road Finance has successfully channeled funds predominantly through bank loans into developing countries in Southeast Asia, Central Asia, Africa, and Latin America, especially in the area of infrastructure. So this financial collaboration has not only facilitated economic development in participating countries, but also has played a pivotal role in poverty alleviation. After the 2008 financial crisis, bank loans from China provided crucial support to governments of developing countries worldwide, helping them navigate the repercussion of the financial crisis, promoting global economic growth. The terms of these loans have been favorable to the recipient countries, matching the benevolence of multilateral institutions like the World Bank with lower interest rates and longer grace period, more beneficial to debt countries than funding from other international creditors. So furthermore, actually, enhanced in the financial connectivity among Belt and Road countries have been evident in the capital markets also. In recent years, we've seen the introduction of Belt and Road labor bonds, the issuance of tender bonds and dim sum bonds by some participating countries. The Chinese private equity firms also setting up Belt and Road Initiative special funds or investing in companies from Belt and Road countries, and Chinese security firms helping Belt and Road Initiative companies achieve listing in Hong Kong stock market. So we have done a lot actually.
Yeah. Dr. Zhao, we're going to come back to the capital markets in just a second, but Professor Gu, I want to get your take in terms of how increased financial connectivity along the Belt and Road countries is really driving socioeconomic development in BNR countries, because I feel finance, look, this is a means to an end. We're not talking about financial connectivity just for the sake of financial connectivity, right? It needs to serve the real economy. It needs to improve living standards and really boost the local living conditions of Belt and Road nations. What do you think, Professor Gu?
Yeah, I think I agree with Dr. Zhao regarding the overall effect of BRI for contributing to the world development. I think especially for the participant countries, BRI changed a lot. I think the biggest contribution for BRI is a BRI start very different economic development model. So in the past, I think many countries rely on the so-called economic globalization. In the past, this was led by the American and other Western countries. That kind of globalization is actually a vertical circulation. Means so the global north means advanced country, they have an advantage. In the global south, relatively, they don't have a advantage. So in that time, so the poor country in the global south normally to producing something and sell the product to the north part of a country. So this is a vertical circulation. But right now, the BRI started a very different circulation dimension or direction. Now it's a horizontal from the west to the east. So this is a developing country to another developing country. So this kind of a new dimension of globalization is a very big contribution to the participant countries. For example, for the poverty reduction and for the industrial upgrading and also create job. I think infrastructure project is more inclusive compared with in the past, because in the past the globalization is mostly dominated by the bankers, by the capital owners. Right now, the infrastructure can benefit ordinary workers. They have a job, their income increased. So this is a very important contribution to the global south, especially the participant countries.
Yeah. Well, again, Professor Gu, I think if you have stronger or more robust economic relations between the global south countries, developing to developing countries, I think that should be a positive for more advanced economies as well, as they have more mature markets and more robust markets to sell into. Dr. Zhao, I want to come back to you because CICC notes that BRI financing, it occupies a very distinct space because it's not just pure development finance and it's not pure commercial finance. It lies somewhere in between. So elaborate on that for our audience a little bit more in terms of this uniqueness.
Well, you just hit a very important question. Development finance primarily aim to support social and economic progress in developing countries, so often prioritizing social economic objectives over profits. On the other hand, commercial finance seeks to achieve profitability and a return on investment in line with what the market requires. So BRI finance, combining elements of the both, exemplifies a blend of national development aspiration with market logic. A key characteristic of BRI finance is to promote mutual development and shared prosperity, fostering amicable relationships among participating countries. This makes BRI finance go beyond the pursuit of pure economic gains and commercial thoughts, showing features of development finance. But on the other hand, BRI finance also recognizes the vital role of market mechanism, which is crucial to the sustainability of projects. This is very important. This contrasts with traditional international aid programs, which depend on free or low-cost funds and can that could hamper a nation's market dynamics. Excessive aid may also have crowding out effect, reducing domestic private sector's investment. So BRI finance emphasizes market-oriented financing operations. But compared with financial aid, it has a greater potential to improve the profitability and long-term financial sustainability of relevant projects. Therefore, BRI finance approach offers a balanced and more sustainable solution.
We're going to come back to this unique positioning in just a second, Dr. Zhao, but I want to come over to you, Professor Gu, and ask you in terms of whether or not you think BRI financing can attract more private sector investment into the projects that it is engaged in. Because like Dr. Zhao was talking about, we see a lot of government financing in BRI projects. But of course, if we're talking about infrastructure, if we're talking about these development projects, we need more than just government-backed financing. So how can BRI finance, you think, spur more private sector investment, crowd in more private sector investment?
I think attracting private investment is a critical, important issue for BRI's success. The reason is we know the BRI project is for infrastructure development. So this kind of investment is for kind of a public goods. Means that this is a long-term development and the return rate is relatively low. So at the beginning, government finance play a pioneer role. I think this is extremely important. And because there's a lot of high risk in the developing world, so this kind of investment by government, especially from the Chinese government, for example, Policy Bank and also Silk Road Fund and other arrangement, I think is extremely important. But this is not the whole story. So we must have the follow-up investment from the private sector. I think we can understand the importance of a private sector's investment or finance from several aspects. The first one is for diversify the resource of funding. So investment of finance from government or from a public budget is not enough. So private finance is a very important source of funding. So this is the first issue. The second issue, I think, more important. So by including private investment, we can change the mechanism for building a BRI. Because the BRI, even this is a public goods kind of development, but still want to emphasize the market mechanism and the cost effect, cost benefit effective, this kind of efficiency. So I think by including the private finance, we can largely increase the hard control regarding by using the market forces. I think this is very important by increasing the efficiency. I think another aspect, for example, private sector, especially from the international MNCs, they have a very good experience for cross-border production and also for many cross-culture management. So we can include the MNCs to contribute to the BRI. Private investment also include the local fund. For example, the participant countries are local fund. For example, in Asia, a lot of saving. So how can we use the saving to transfer to the investment? This is a very, very important issue. For example, local currency and also the local private sectors are contributing extremely important.
Dr. Zhao, so as you and Professor Gu have both mentioned, the BRI, it has that market-driven component, but it also needs to service development purposes as well. And I want to get your take in terms of how challenging that trade-off potentially may be and what you see as the potential for public-private partnerships as a kind of financing model for BRI projects. Dr. Zhao?
Well, it's very important to boost economic growth in BRI countries without distorting the market-based resources allocation mechanism. The market-driven approach can be exemplified by in many ways. For example, the diversification in investors' base and funding sources. Compared with relying solely on government funding, diversification can help reduce investment and financing risks and improving investment and financing efficiency. So also, some industries can be better supported by market-driven approaches. For example, in the area of digital development, private equity, we call PE, and venture capital, we call VC, and other equity-based financing can also benefit, can better support technology startups. And talking about public-private partnership, which can be simplified as PPP, they are conducive to diversification and marketization of finance, especially in the field of infrastructure construction. The PPP model consists of the government and the private sector jointly providing public goods or services, and has been widely practiced in developed countries as well. Currently, PPP accounts for a small proportion of BRI finance and has great potential for development in the future. Actually, in addition to PPP, the G20 just announced at its development ministers meeting in 2022 principles to scale up blended finance suggesting that governments advance local sustainable priorities for development and engage in more cooperation with multilateral institutions, foundations, philanthropists, and other private investors who value social influence, institutional links, and other diversified goals, Michael.
Well, Dr. Zhao, I want to follow up a little bit because if we want to see stronger financial connectivity, we're going to have stronger, I feel, capital markets in Belt and Road countries. We know right now many of the countries along the BRI, there's of course still emerging markets, they're developing economies, or perhaps some are even low-income economies. So how do you see stronger connectivity through the BRI, through finance, really supporting and boosting the development of capital markets along the Belt and Road countries?
Yeah, I think two sides on this question. One is that we know most BRI countries now have relatively small capital markets, and expansion and development of these markets are essential for their economic growth. So as they strive to develop their capital markets, they often need to attract investments from other nations to bridge any short-term financing gaps. Beyond mere financing inflow, these countries are also seeking specific attributes and characteristics linked to the capital itself. For example, there are needs to broaden financing beyond the US dollar, to secure long-term financial backing, to learn from mature capital market experiences, and to integrate industry-specific know-how and resources. But on the other side, China's own experience with its rapidly growing capital market over the past decades can offer a template or a model for BRI countries. The similarity between the development paths of China and the BRI countries offer a valuable opportunity for knowledge and expertise sharing between the two parties. Specifically, China financial institutions can offer insights into the establishment and the refinement of financial regulatory frameworks, the construction of multi-tiered capital markets, and the principles of green finance and the ESG and so on. So these collaborative efforts under the umbrella of BRI open a world of opportunities for both China and the BRI nations, mutually benefiting from shared growth and prosperity from development of the capital markets.
Yeah, and speaking of opportunities, Professor Gu, we have seen that trade between China and Belt and Road countries have essentially doubled since the initiative was first proposed back in 2013 until the end of last year. How do you see stronger financial connectivity between BNR countries really enhancing trade along the BRI as well? Because unimpeded trade, that's also one of the other 5 major priorities of the Belt and Road Initiative. And if we have stronger financial connectivity, that should help with supporting trade flows as well.
I think this is a big change in the global trade. Just like I mentioned, in the past, we mostly focus on the trade with global north. Means we just sell our product to the developed countries. For example, U.S. market, European market as our destination. But right now, we can see there's a huge difference for the global trade. We are happy to see there's more and more trade among the developing countries, means from global south to another global south. So this kind of a shift very important. Firstly, now the developing world, since the global finance in 2008, their purchasing power is a decline. So they cannot buy so many products from the developing world. So we must find out another destination. So now BRI opened another channel for international trade. That's a land route channel. In the past, the maritime route played a very important role. But the land route country, for example, so-called landlocked country, the they are largely be ignored. So the BRI, especially the land route infrastructure projects building, increased the connectivity from the in the land route sphere. So in this situation, largely increased the international trade, especially for developing country. In the past, the developed country cannot go to the seaport easily. The transportation cost is very high. But right now, we have the land route building of infrastructure project. Their transportation costs can be significantly low, logistic costs are significantly low. So this can increase the global south trade. We are happy to say from many statistical yearbook to show the north-north trade actually declined, but the source-to-source countries trade is largely increased. And also, we can see there's an integration, for example, for ASEAN country, for Southeast Asia. What I want to say is the semi-product, the components increased. So these kind of things already show us BRI actually contributed a lot to the global trade, especially for the developing countries. And for the landlocked countries, they benefit quite a lot.
Yeah, I think a prime example of that, Professor Gu, is Laos, for example, going from that landlocked country in Southeast Asia to a land-linked one, because now it is linked by faster trains, that high-speed rail that China helped build. And eventually it's going to go to Singapore as well, I believe, that high-speed rail going from China's Yunnan province through Laos, Thailand, Malaysia, and then eventually to Singapore. Mongolia also stands to benefit when it comes to being a landlocked to a land-linked country, because one of the 6 major overland economic corridors go through Mongolia as well. So helping Mongolia, to link up with seaports along China's eastern seaboard as well. And Central Asian countries also becoming landlocked to land-linked countries. I want to come back to the issue of finance, Dr. Zhao, and get your take in terms of what you think stronger financial connectivity means for improving the technology aspect of finance and banking in Belt and Road countries. Do you think it can boost perhaps the fintech abilities of BNR countries?
Well, certainly. Many of the Belt and Road countries are less developed economies and often face challenges like a shortage of high-quality financial institutions. So this creates the financing gap for small companies, most of which are startup companies. For China, however, we have made significant progress in fintech. So China can provide these countries with, provide Belt and Road countries with the knowledge and expertise to bridge this financing gap. Belt and Road nations can benefit from the experience that China has accumulated in this area. With the integration of big data, fintech companies can complement traditional banking, especially benefiting small companies which might be sidelined by conventional banks due to higher risks of lacking of collateral. For instance, according to data from one China's leading virtual bank, My Bank, in 2017, about 99.8% of its loan borrowers were small enterprises. So about half of these small enterprises are located in 3rd and 4th tier cities. This just showcases the potential of fintech in reaching underdeveloped population, Michael.
And stronger fintech connectivity, I think, and stronger fintech capabilities can definitely boost trade along Belt and Road countries as well. Professor Gu, Dr. Zhao mentioned small and medium-sized enterprises. How important do you think is a stronger connectivity for really unleashing the potential of SMEs to do business along the Belt and Road?
I think I fully agree with Dr. Zhang regarding the fintech's role for promoting financial assessment for the small size SMEs, means small and medium-sized enterprises. So in the past, the SMEs was a very struggle to access traditional financial services. So right now, with the rapid development of fintech, so they can access the new resources by using, for example, mobile banking, digital payment platform, and online lending, many the new fintech solution tools. So this will provide a very good bridge between the the new way of financing and also traditional way of financing for the SMEs. And another way, I think for SMEs in the past, it's very difficult for them to participate in the global investment and also global trade. The reason is logistic cost is very high for them. Now the BRI significantly lower the logistic cost and also transportation cost. So this can make SMEs relatively easier to access international market and international trade. So this is good news for them to develop.
Yeah, I mean, SME is so crucial to national economies. They are the backbone of so many countries around the world. Professor Gu, I want to stick with you because we live in an extremely uncertain economic environment right now. How do you see the BRI and stronger financial connectivity along the routes really sort of enhancing economic resilience?
I think the current challenge for our world is, I think, from two aspects. One is a geopolitical conflicts. So we can say, unfortunately, we see some decoupling and also supply chains disruption. Another one is economic slowdown, especially after the COVID-19, and also due to the high, inflation rate in the world, and also very strong US dollar. So I think the current world, the biggest issue is how to maintain our economic resilience. BRI's contribution, I can highlight from this following aspect. The first one is by strengthening global supply chain by this way, because infrastructure can be strengthening global supply chain. So this kind of resilience is very good for global economic resilience. So this will mitigate some disruptions caused by economic downturn in some areas, especially for developing world. We can see due to the US dollar is so strong, developing world, the financial market, and there's a potential financial risk. So in this time, the inflow of financial resources is very important for the developing countries.
Yeah.
And also by improving transportation and the logistic network is also can be for this country to access the critical inputs, raw materials, and also diversify their supply resources. So this kind of infrastructure development very critical for many countries to be resilient in the economic downturn situation.
Yeah. Dr. Zhao, I want to come to you because Professor Gu talked about the issue of inflation, and that has, of course, prompted many of the central banks in the advanced economies to really hike interest rates at quite a fast pace, and that's led to, like Professor Gu was talking about, a stronger US dollar relative to many currencies around the world. In this kind of environment, then, with such high US dollar funding costs, do you expect more Belt and Road companies to perhaps raise funding here in the China market?
Yes, I do anticipate more companies in Belt and Road countries to seek funding in China's capital market. I mean, from financial cycle perspective, the most important constraints for foreign entities raising capital in China were largely due to funding costs and valuation. However, the ongoing changes in the financial environment around the world may encourage foreign entities in need of funding to refocus their attention on the Chinese market. And starting last year, domestic interests in China began to fall against the backdrop that the U.S. Treasury is hiking rate. So that make panda bonds more attractive and eye-catching, I believe. Michael.
Panda bonds, of course, foreign companies raising capital here in the Chinese mainland market. Dr. Zhao, I want to stick with you. Do you think then China can provide that long-term and stable funding for Belt and Road countries in their projects?
Yes. I mean, given the interest rate levels and the landscape of investment opportunities, the demand for Chinese funds to invest abroad is likely to be long-term in nature. Currently, Chinese institutions in offshore markets are starting to look at investment opportunities in dollar-denominated bonds from Belt and Road countries, such as those from the Middle East and Southeast Asia. These shifts represent the increasing desire to domestic capital to expand and invest in Belt and Road countries, with a focus to pursuing long-term investment return. Also, the private equity and venture capital and other equity-based investment with higher risk tolerance and longer time horizon may also become an important sources of funding for companies that are still in early business stages in Belt and Road countries. So I do believe that China can position to provide long-term and stable funding support for Belt and Road nations. Michael.
I want to turn our conversation to green development, Professor Gu. How do you see perhaps the BRI and stronger financial connectivity really spurring more green finance? Because look, clean energy, green energy, renewable, these are major components of the BRI right now. So how do you see stronger financial connectivity perhaps supporting green finance in BNR countries?
Yeah, I fully agree with you. The BRI right now already have a lot of green development plan. This is quite different with the first stage. The second stage of BRI in the over the past 10 years. So BRI emphasizes very much on the green development. So align with the global development plans, such as United Nations 2030 agenda for sustainable development. So this so-called green BRI focus on promoting global green and also sustainable development, particularly in terms of developing more green finance. So this kind of change aims to not only provide the funding for infrastructure. In the past, they mostly focus on infrastructure, but also for targeting more green industries. So this kind of a change will gradually drive global industry green transformation and also development. And I think another very important initiative is China signed a lot of green development plan. For example, Belt and Road Green Investment Principles in 2017. And this kind of principles are already recognized by many countries. So this is so-called low carbon and sustainable development objective incorporated this kind of goals in the development. And we're also happy to see China's investment already from the traditional coal to the renewable energy. And China's investment in renewable energy already exceed coal investment in, I think, 2 years ago or 3 years ago. So this is a very important improvement.
Yeah, absolutely. I mean, we know, of course, the world's majority of countries are still developing economies, and the vast majority of the global population still live in developing economies. So if we want to, as an international community, to achieve our net zero goals, I think we definitely need more investments to spur more green finance in these developing and emerging market economies. Dr. Zhao, I want to come to you and get your take on what you think the Belt and Road means for the internationalization of the Chinese yuan, the RMB.
Well, I think it means a lot. It means in very beneficiary opportunity for China to promote RMB internationalization. We know that the Belt and Road Initiative is pivotal for the RMB's role on the international stage. Historically, the international monetary system has shown very strong inertia. So although China's economy and trade volume have grown significantly, the use of the RMB in global trade settlement, in foreign exchange transactions, and as a reserve currency still lags behind China's economic and trade share. So the evolution of international currency system usually requires a significant socio-economic events to break this kind of inertia. The shifts of the global landscape provide an opportunity for RMB internationalization. China has extensive economic and trade ties with Belt and Road countries, and under this Belt and Road Initiative, many countries have recognizing the challenges posed by the existing system, and now they started to be keen to diversify the use of the currencies, international currencies. That offers an opportunity for China's RMB internationalization, I think. Michael.
Dr. Zhao, I want to stick with you because CICC believes that the scale of BNR capital markets may increase at a relatively fast pace in the next 5 to 10 years. And I wanted to maybe lay out for our audience, how do you envision that to happen?
Currently, due to the fact that China's capital accounts are not fully liberalized, so China's secondary market cross-border capital flows are not as dynamic as outbound direct investment activities toward the Belt and Road nations. So therefore, the ODI actually accounts the biggest share of China's investment in Belt and Road countries. And the ODI can offer valuable insights for capital market development. It can also help assist the domestic capital to better expand internationally. At the same time, ODI also help Belt and Road countries better understand China's capital market and financial capacities. So based on the foundation of mutual capital flows, mostly under the ODI mechanism, the development of Belt and Road capital market will accelerate in the next 5 to 10 years, I believe, driven mainly by the capital demands of Belt and Road countries, the further opening of China's financial account, and the related policy supports from both China and Belt and Road countries.
And finally, Professor Gu, I want to come to you in terms of getting your outlook as we embark on the second decade of the Belt and Road Initiative. What is your outlook for increased financial cooperation along the Belt and Road Initiative countries?
I think for BRI enters the second decade, so some very important issue to be addressed. The first one, I think, is regarding how we can integrate the BRI's building project into to address the global big challenges. Now, our world, we are facing serious challenges. For example, poverty reduction, global financial system stability, and also industrial upgrading, and also high-level urbanization. This is a very, very important issue for many countries, especially for developing countries. So I'm thinking about how BRI in the second decade can help to solve this kind of global big challenges. So another issue, I think, is how to establish a financial mechanism. It's not just for putting money. Also, we need to establish a good financial system and also regulation system. And I think this kind of a software building is extremely important we need hardware, or we also have software, also very important. So another issue I think is regarding how we can broaden our financial resources, and especially overcoming the geopolitical challenges. Now we can see another part of the world, a lot of infrastructure plans already come out. So if this kind of infrastructure plans focus on global development, I think that's the good news. But we must carefully to think about to avoid the geopolitical competition, and to put the development as our central place of our world. This is very important. So we need to have a global coordination, whether this is a developing world or developed world. So we must work together, for example, to maintain the security and also risk management, and also towards the green development. So I think I'm looking forward for the BRI's outlook in future. There's a lot of issue to be concerned and to be encouraged.
Yeah, well, overall, a lot of growth potential when it comes to further financial cooperation along the Belt and Road countries, and certainly we are looking forward to how stronger financial connectivity can really improve the living standards, serve the real economy, and serve the development of all countries along the Belt and Road Initiative. We're going to have to leave it there. Professor Gu, thank you so much for your insights. Professor Gu Qingyang from the Lee Kuan Yew School of Public Policy at the National University of Singapore. And our thanks, of course, to Dr. Zhao Yang, who is Managing Director of CICC's Global Institute. Thank you to you both. And I'm Michael Wang here in CGTN's Beijing headquarters. Thank you so much for joining us on this edition of Biz Talk. We'll see you again next time.